Hey guys, Dave Keller here with Market Misbehavior. Today we're going to be talking about a big competition for FAANGs versus the 50-day moving average. So the first half of 2023 was all about the dominance of mega cap growth stocks, the FAANG stocks, or what I like to call the phenomena stocks. Names like Microsoft, Apple, Amazon, Netflix, Alphabet, and others all comprise these mega cap names. And the concentration of outperformance in this small group of stocks has been, I would argue, the story in the first half of the year. Starting to change here in July and now into August as the dominance of those stocks may be starting to dissipate because you're seeing an improvement in other areas of the market. Things like energy, industrials, financials actually having a bounce in the month of July. So what happens now if and when some of these leading growth stocks start to pull back? Well, in an uptrend, you often look at the 50-day moving average as an ideal pullback point. And what I call the fat pitch chart is where you have a long-term uptrend and then a short-term pullback to a key support level. The 50-day or the 10-week moving average is often a really good place to look. What's happening this week is a number of those stocks are actually starting to approach those levels. Now, before we get to the charts, by the way, if you like this sort of thinking about technical analysis, market history, investor psychology, subscribe to my channel. Why not? Also, give the video a like if you appreciate it. We would super appreciate that back. Finally, do you see these stocks holding their 50-day moving averages or not? Yes or no? Let me know in a comment below. Let's start with the chart of Apple. You can see that Apple has had such an incredible run, right? It sold off and actually made a new low at the end of last year, while the market itself actually bottomed out in October, right? The S&P and the NASDAQ bottomed out in October and rallied from there. Apple actually made a new low. That seems like, years and years ago. It seems like ancient history that Apple was making a new low when the markets themselves were not, because 2023 has just been a completely different environment. Look at the rally. Turned on a dime the first week in January, and from there it's been lights out uptrend. A brief pullback in February, but other than that, it's been long and strong up and to the right. The relative strength here at the bottom shows the story of how consistently that Apple has outperformed again until July, when all of a sudden the relative strength, instead of sloping upwards, sort of going sideways to down a little bit. And that's because the markets themselves, the S&P and the NASDAQ, have continued to rally. Apple, just the pace has slowed down just a little bit. And overall, it's not quite outperforming anymore. Pulling back a little bit this week, and my usual go-to level of potential downside support would be the 50-day moving average, particularly in a consistent uptrend. As long as a stock like this holds an ascending 50-day moving average, things are just not getting that bad, because holding the 50-day means the trend is still progressing higher. And even though we're pulling back, we're continuing to make new highs. Higher highs, higher lows are an uptrend, and so an ascending 50-day, often a good pullback point. So that's the chart of Apple for now, sort of consistently positive. But let's look at some of the other FAANG stocks, and you'll see that Microsoft, a very different look. So Apple, of course, the biggest stock in the technology sector, followed closely by Microsoft, about a $2.5 trillion market cap versus Apple's $3.1 trillion market cap. So both significant mega cap names, of course. These two stocks, by the way, make up about 50% of the XLK. So if you're looking at the technology ETF using the XLK, you're really playing Apple and Microsoft and then a bunch of other things after that. Microsoft, of course, made a new high in the month of July. Mid-July, actually got above 360. We're up to around 365 and then pulled back. Look at the pullback to the 50-day moving average here in July. You see previous pullbacks in March. The April pullback didn't quite get there, but of course in July we did. And now in late July, we've sort of hit around the 50-day moving average and now broken below. This is the concern I would have for the growth leadership. And I think one of the things to look for is, as a macro perspective, is to whether these leading growth names can hold their 50-day moving average. If so, that would suggest to me that growth probably continues to lead on a relative basis, sticking with charts like Microsoft and others. If they hold their 50-day, it's a pretty decent bet. But what happens if they fail to hold the 50-day, like Microsoft apparently might be doing this week? We'll see. This week has a lot of game left. We're still on Wednesday of this week, first week in August. But overall, potentially breaking below the 50-day moving average. I would also, by the way, be looking at the momentum characteristics. Look at how the RSI has remained for the most part above 50, and it's very rarely gone below 40, particularly in those pullbacks in February and April. When we previously tested the 50-day moving average, you could see the RSI remained above 40, never really got below there. We're right back down to that level. So here we have Microsoft testing, potentially failing to hold the 50-day. We have the RSI right at that 40 level. We get below the 50-day, we get below an RSI of 40. That would suggest high likelihood that Microsoft has further downside to go and a further retracement. Now, what would you do if a chart like that breaks a little bit further? This is where I go to Fibonacci retracements, Fibonacci analysis. Easiest thing to do is pick the high, go down to the low, or pick the low and go up to the high. Either way, it doesn't matter. So here I'm basically saying the high from last month, from July, and the low from November of last year, which is when Microsoft bottomed out. We break the 50-day, the next downside objective would be around 307, 308. That would be a 38.2% retracement of the way down, and that would be the potential next level of support. That might be the downside objective I would be working with if Microsoft does indeed follow through below the 50-day moving average. Let's look at a couple others. Amazon is another one testing its 50-day moving average this week. You can see last week we actually bounced off of an ascending 50-day moving average. We made a bit of a lower high here, and now we're once again testing the 50-day moving average. What concerns me on the chart of Amazon is the bearish momentum divergence. Look at the higher highs in June and July and the lower peaks in momentum. That might be one of the most damning pieces of evidence I could show you in the video today. Finally, Netflix, another one with a bearish momentum divergence with higher highs June and July, lower peaks of the RSI, lower peaks in momentum in June and July, and the price is once again testing the 50-day moving average. So what concerns me about a lot of these stocks is that they are testing the 50-day. Microsoft potentially breaking it. Others like Netflix and Amazon literally testing them as we are putting this video on. I think this is a key level to watch to see if this can hold. I would suspect they don't hold, given the fact that rates are rising so much. It doesn't tend to be a great environment for growth stocks. Unfortunately, may weigh pretty heavy on some of these growth leadership names. That brings us to the last chart I'll show you today, Alphabet. So Alphabet is actually unusual. Think about the chart of Apple, which has actually had a pretty good run. It hasn't even touched the 50-day in 2023. Alphabet actually has, and you can see it bounced off of the 50-day in June and July and actually made a new high for the year just last week. So it's pulling back a little bit. And again, the standing question for any of these charts, can it hold the 50-day moving average? Alphabet is actually unique in the fact that it's already tested and been able to hold the 50-day in the last month. So can it do that again? If we do get a further pullback, which I think we do we hold the ascending 50-day moving average? And if not, that's where I would use things like Fibonacci retracements and other tools like moving averages to gauge potential downside objectives. I wouldn't be surprised if that's what we are talking about in the months of August and September. What do you think about these four FAANGs testing the 50-day moving average? You think they're able to hold that key level of support? Yes or no, and why? Let me know in the comments below. For Market Misbehavior, I'm Dave Keller. Be well, stay safe, have a good one.